this imbalance here. So dollar is a little bit overzealous, and we'll see if it wants to get up to that 104.54 level. I mentioned yesterday the idea of it opening, trading down to a previous day's high, not offering any opportunity for a deferred inefficiency, which is what a fair value gap is. I dubbed it a fair value gap is because the market moves away too quickly and it leaves an inefficiency by means of an imbalance in price. So since the candles are moving higher, the imbalance is buy side. So it's buy side imbalance, sell side inefficiency. So it's inefficient in offering down delivery or movement delivered on the downside. So price rotation on a liquidity continuum basis, meaning that the price is efficiently delivered between a range of price action. For instance, if we were to look at the range between 103.20 and 103.40, that's 20 pips for euro. It's moved up, down in that range between 40 and 20 multiple times. Notice that? So if price has been moving back and forth between a defined range of 103.40 and 103.20, if we get a bias determined, which is what I'm sharing my 30 years experience with you, telling you that this is where it was going to go and then higher still. If we ever get an opening on a candle and it drops down to a previous high, now normally if this would have stopped short, like say the low was up here and didn't go all the way down to Monday's high, that would create a typical deferred inefficiency, meaning that it would go to a fair value gap protocol, something like what we've seen. Well, let me take it back up one more time. This is a fair value gap between this candle's high and this candle's low, and that one candle on the downside. That low, that high, in between those two price points, price only went down. So it's a fair value gap, yes, but a specific category is a SIBI, S-I-B-I, sell side imbalance, buy side inefficiency. So it needs to see what? To be efficiently balanced upside delivery. And that happens on this candle here. And then we opened and we were in this weekly candle. But I mentioned during this weekly candle's formation that we would use this as an inversion fair value gap. So it's typically viewed, if you would just watch a casual viewing of my videos and you would think, okay, well, he says if it goes up here, it's probably going to start going down. No, that's why it's important to understand narrative. That's mentoring. Okay, you only get that from me if you spent time with me, not just a few videos. You cannot assume by watching a few videos or watching anybody else try to do it, and parrot whatever I said incompletely. You can't learn that way. You have to have a length of time through exposure and seeing it over and over and over again, but ringing in narrative. That gives you a bias. That gives you a context, a framework for a trade. Without those steps in that order, you're not going to find a trade that's high probability. You're going to be lost in the charts and you'll just be frustrated. So let's go back down to the daily chart. I mentioned yesterday, if we see this formation, and this is what I dubbed a immediate rebalance. So we opened here, traded down to a previous day's high. It doesn't mean it's the previous day immediately to the left or yesterday's high. We're always referring to the essence of inefficiency and redelivery. Fair value gaps highlight those inefficiencies and opportunity for redelivery. So for instance, like take a look at this candle here. We have this candle's high, this candle's low, so there's a fair value gap. It trades down, but it doesn't go all the way back down to that high. Notice that? That's fine. That right there, to me, is a breakaway gap. I'll talk a little bit more about breakaway gaps in this lecture. This candle opening, it trades down and goes right to this candle's high, which is Monday's high. So it gives no room or opportunity for an inefficiency to exist. Why? Why would that happen? If we're bullish and markets are expected to go higher and it does this type of formation, you'll want to write this in your journal. This is one of the most powerful signatures for immediate dynamic price delivery. I said this to you yesterday, and if you've watched any of my older videos, and if you've been with me for a long time as a student, you've heard me refer to an immediate rebalance, and that is one of the strongest algorithmic price delivery signatures you're going to see. Look at the price delivery here on dollar. Look how fast and snappy that was. Notice that?